Hello guys, welcome to my channel. Today we'll be talking about how I traded USD card this week. And if you know you are new on my YouTube channel, please do well to click the subscribe button and also give me a like. Thank you very much, and we'll jump into the shout. And so we'll talk about how I traded USD card this week. Okay, a lot of people that have been following me, a lot of you guys, you all know how I trade already. My strategy is very simple, it's not complicated, and you can see I trade very easy. So for those of you that want to know or learn my strategy and know also how I trade, will also follow me for more of this content. Okay, I think this was the trade I analyzed during the week. Okay, and this was the outcome. We hit 100 pips take profit, and normally I usually use my 20% stop loss. That is all. I don't use more than 20% stop loss, a 20 pips stop loss, sorry, and I don't cash more than 100 pips, okay, at a go. Okay, you can see how sweet the chart looks now. Let me take it to an hour time frame, okay, daily time frame, so you can see that it was a beautiful move, no stress. Cash it once, okay, 100 pips, 100 pips. Okay, let's jump into the chart and see how I was able to cash this 100 pips here. Today I'll be teaching you guys how I trade. Okay, for those of you that do not know how I do my analysis, and today on this video I'll be teaching you guys how I trade using my analysis. Okay, so there is a 1 hour time frame. This is a 1 hour time frame, so let me mark something out here. Okay, so this, I'll take this off, take this off. Okay, so for those of you that have been watching my previous video, you will see that I talked about something. I said after an aggressive move there will always be a correction. After an impulsive move there will always come a correction to correct that move. Okay, so the reason I took a buy here, after this move happened, after this aggressive move happened, this one here, when I saw this move I said, okay, I'm going to trade the correction. Okay, I'm going to trade the correction of this move. So what did I do? I look for my entry position on a lower time frame. This is the 1 hour at the daily time frame. So I look for an entry position on a lower time frame. So after going to the lower time frame, I try to spot out a sweep of liquidity, a break of structure, retracement also. So for those of you that already know how I trade, this is how I trade. I look for a sweep of liquidity, then do what? A break of structure also. Okay, on this place there was on this place here a little sweep here, a sweep of liquidity here. Then after this sweep of liquidity I saw this break of structure. this break of structure to the upside. So let me draw it. This is a break of structure here. This is a break of structure to the upside. Okay, when I find this break of structure, when I saw this break of structure, I did something. I bring out my Fibonacci tool and I draw for a 50% retracement. Here was my 50% retracement. Okay, I said, okay, since this is my 50% retracement area, okay, what did I do? I placed my point B here on the on the 60% level. I brought out, I placed my trend line. I place it on my rectangular line, sorry, place it on the 50 or the 60% 60% retracement area. So after I did that, let me take it to 15 minutes time frame. Okay, this was the sweep of liquidity here and the break of structure, your 15% retracement, and then I was waiting for another break of structure. I was waiting for another break of structure to happen. So what did I do? I could not wait for the second break of structure to come into my zone before I took the trade. So what I did, after I saw this sweep of liquidity, the first break of structure, the retracement, I was expecting another break of structure, which was this. Which was this. Which was this. Okay. Now, this was the second break of structure that I was expecting. You see, we got 96 pips already, making it 100. And this is how I caught my 100 pips. I always use the 20 pip stop loss, and this 20 pip stop loss will be below the previous low. Okay, and this is how I caught my 100 pips, and this is how simple the strategy is. Okay, and now I missed the second trade because after when you are using my strategy, the advanced market structure, when you spot out a sweep of liquidity, then you look for a break of structure. Okay, after a break of structure, look for a retracement, 50% or 60% retracement. Then when you spot out your 60% or 50% retracement, that area is going to be your entry area. Okay, now you have to either buy at that 60% retracement area. Okay, when you buy, you need to buy the second break of structure. Okay, and then after buying the second break of structure, you wait for a retracement into the previous zone. Okay, you wait for a retracement into the previous zone. After waiting for a retracement into the previous zone, then you do what? You have to buy the second time. And this is what I missed this trade because I was not on seat. I was not online to trade this place. You see how sweet it is. This is another 115 pips, but we only go for 100 pips. 100 pips, 100 pips. Okay, that's it. You can see how simple my strategy is. You can see how simple my strategy is. All you have to do is to look for the sweep. This was a sweep of liquidity, a break of structure, 50% retracement, another break of structure. Now what you have to do is to wait for it to come back into the previous zone, and then you can see there is no rough movement. Everything is clear. So while you are using my strategy, if you want to learn more about how I trade using the advanced market structure, please do not forget to subscribe to my YouTube channel. And also I'll be dropping my private Telegram channel link, so you can also follow me up on my Telegram channel so that you can learn more on how I trade the forex market. Okay, so this is something else I want to show you. This is 26 pips, 26 pips. Okay, this is 20 pips. So let me show you guys how it is. Okay. Okay. All right. So we'll go with this. Okay, let me just this is a plain screen. This is a plain screen. Let me add it to favorite so it will go. Okay, add to favorite. Okay, now this is my screen. I'll be using a buy setup as an example. Okay, now you have your sweep of liquidity here, then a break of structure. After having your break of structure, then you look for a 50% retracement into the previous zone. After having a 50% or 60% retracement, then you have your second break of structure. After having your second break of structure, you wait for confirmation into this previous zone. Then if your setup is like this, you have to catch the second move to this same level. Okay, this is how simple it is. Your sweep of liquidity, the break of structure, the 50% retracement, this will be your entry level. Now you have to cash the rest upward. The same applies to if you are going for a sell position. Okay, and your stop loss will be below the lowest low. Okay, the previous low, sorry. So this is how simple it is. We have the type 1 setup, we have the type 2 setup, we also have the type 3 setup. So I'm just using a type 1 setup as an example. Type 1. This is a type 1 setup. Okay, so I'll be dropping more videos so that you can be able to know how to trade the type 2 and the type 3 setup. Okay, if you find this video helpful, please do not forget to click on the subscribe button and follow for more of this video. Thank you very much, and see you in the next video.